Welcome to the deep dive. Today, we're taking a focused look at Mitsubishi Heavy Industries, MHI.
Right.
This isn't just, another industrial giant. They're really a sprawling tech powerhouse involved in everything from, well, advanced power generation to aerospace.
Absolutely. A huge scope.
Yeah, exactly. So we've sifted through quite a bit, business analyses, financial reports, news articles, basically, to distill the key insights for you on where MHI stands now and where they're heading.
Exactly. We're aiming to cut through all the, let's say, dense corporate language.
Huh.
Get to what really matters. How is MHI navigating these big global shifts? Energy security, what does it all mean going forward?
Right.
So the mission today is really to give you a clear picture of MHI's present and, well, its future, pulling out the crucial bits from the materials we looked at.
Okay, so let's set the stage then. What's really driving MHI? What's their kind of overarching goal?
Well, their official mission is to take on global challenges with ingenuity and integrated solutions that advance a safe, secure, and comfortable world.
Okay, sounds ambitious.
It is. And more concretely, they're really zeroing in on achieving mission net zero by 2040.
2040, okay.
Yeah, and also contributing to a, quote, safe, secure, and comfortable society. These goals, they really frame their whole strategy.
And they have a track record, right? This isn't like starting from scratch.
Oh, definitely not. Their 2021 business plan, they call it 21. That was, well, a really strong period for them. They hit record profits, which is important because it built a solid foundation, especially in key future areas like hydrogen and ammonia tech.
Right.
CCUS, that's the carbon capture stuff.
Got it.
And also electrification and data centers, which are obviously booming. So that past success, it's really informing what they do next.
Okay, so building on that momentum from the 21 plan, what are they focusing on now? Where are the big efforts going in the next few years?
So their current plan, the 2024 one, or 24N, it really emphasizes managing their portfolio strategically. And like I said, leveraging that groundwork from before.
Yeah.
They're channeling resources into businesses they see as, let's call them steadily growing.
Okay.
Which ones are those?
We're talking gas turbine combined cycle, GTCC power generation, nuclear power, and their defense sector.
Right, the big three.
Pretty much. And they expect these areas alone to add about another trillion yen in sales.
Wow.
Yeah, so it's a very focused approach, shows where they see the, most immediate opportunities.
Okay, let's dig into those steadily growing businesses a bit. Starting with GTCC. Why are gas turbines so key right now?
Well, several things are happening at once. You've got stricter CO2 regulations, which makes efficient tech like GTCC look better compared to, say, old coal plants. Then you've got the rise of renewables, solar, wind. They're intermittent, right?
Yeah.
So you need reliable backup power that can ramp up and down quickly.
For grid stability.
Exactly. GTCC is great for that. And finally, data centers. Just the explosion in data centers is driving massive demand for dependable on-site power.
Right. They need constant, reliable power. Constant. So all these trends together create a really strong market for GTCC.
So it's not just selling the current turbines, they're innovating too, pushing the tech.
Precisely. They want to keep that top market share. So yes, improving reliability, but crucially developing the tech so these turbines can burn cleaner fuels.
Like hydrogen.
Like hydrogen and ammonia, yeah. And they're also thinking ahead, future integration with CO2 capture.
Okay. Bolting on carbon capture later.
Potentially, yeah. Make it even cleaner. And to back all this up, they're planning to expand production capacity, hire more people, train them up.
Okay. Now, nuclear power. That's often a contentious topic. What's MHI's play there?
Yeah, it definitely gets debated, but MHI sees a real opportunity, and it lines up with Japan's national policy, which is now actively promoting nuclear power use.
Right, so policy tailwinds.
Exactly. Their strategy is kind of multi-pronged. Near term, a big focus is supporting the restart of existing plants in Japan.
Okay, getting the current fleet back online.
Plus, establishing the whole fuel cycle, making sure plants can run stably long-term, maintenance, all that. And they're also looking at exporting nuclear tech and equipment.
And are they looking beyond current reactors, new designs?
Absolutely. They're actively designing their own advanced light water reactor. It's called the SRZ-1200, aiming for commercial viability around the mid-2030s.
Mid-2030s, okay.
Yeah. And they're also involved in developing demonstration plants for fast breeder reactors and high-temperature gas reactors. So it's a broad approach, shows they're committed long-term, exploring different tech paths.
Okay, that gives us a good picture of the energy side of these steadily growing areas.
Yeah.
What about defense? How does that fit in?
Well, defense is obviously being driven by higher defense budgets globally. Geopolitical tensions are rising.
Right, everywhere.
Yeah. So MHI is focusing strategically on things like standoff capabilities, engaging from a distance, integrated air and missile defense systems, developing the next-gen fighter jet, and also unmanned asset defense. That's becoming increasingly vital.
Drones and autonomous systems.
Exactly. They're positioning themselves to be a key player in meeting those evolving security needs.
All right, so those are the steady growers. Now, let's shift to what they call growth areas for commercialization. This sounds like the more, maybe, future-facing stuff.
That's right. This is where they're really pushing innovation, looking to scale up new businesses. Big focus on decarbonization and smart infrastructure.
Okay, so first up, hydrogen and ammonia.
Yeah, central to their whole mission net zero thing. They've actually got a project up and running in Utah in the U.S.
Oh, really? Doing what?
Producing, storing, and supplying hydrogen. So it shows they can do it practically.
Right. Proof of concept.
Kind of, yeah. And they're developing gas turbines linking back to GTCC that can run on hydrogen and ammonia, plus the equipment to make hydrogen. It's building towards that future energy system.
And CCUS, carbon capture, utilization, storage, that's another big one.
Huge focus. They're getting a lot of interest, apparently, collaborating with big names like ExxonMobil. They're working on next-gen capture tech, trying to make it more efficient, and scaling it up through partnerships both in Japan and internationally.
And they have existing tech here, right? They're not starting from zero.
Definitely not. They're actually a world leader. Their KM-CDR process and the advanced version already used in plants in Italy and Canada.
Okay, so they have credibility.
They do. They're even looking at putting CO2 capture modules on FPSOs, those big floating oil and gas production vessels.
Wow. Offshore capture.
Yeah. And working with Chiyoda here in Japan to expand the domestic market, their existing expertise is a major advantage.
Sounds like real momentum in decarbonization tech.
Yeah.
What's the third key growth area?
That would be electrification and data centers. We touched on data centers earlier.
Right, the power demand.
Exactly. It's relentless growth. These places need vast amounts of power and cooling, so MHI is positioning itself to offer integrated energy management systems.
Like a one-stop shop?
Pretty much. Power, cooling, all managed efficiently for this booming market.
You can really start to see how these different parts of their business might, connect and reinforce each other.
Absolutely. There's a lot of potential synergy there.
So beyond these specific growth areas, are they also just trying to make the whole machine run better?
Yeah.
Improve overall competitiveness?
Oh, for sure. Across all their main sectors, energy, plant and infrastructure, logistics, aerospace, defense, they're actively working on strengthening customer connections to boost sales.
Standard stuff, but important.
Right. And investing in DX digital transformation to improve their service businesses, developing more competitive tech, and just optimizing how they're structured, making the whole organization leaner, more agile.
Okay, we've covered the strategy, what they're doing. Let's talk money. How's their financial health? Are they on solid ground?
Yeah, understanding the financials is key. So, super quick refresher. You've got the balance sheet assets, liabilities, equity, like a snapshot in time.
Right.
Income statement revenue minus expenses equals profit over a period. And cash flow statement tracks cash coming in and going out from operations, investing, financing. Together, they give you the full picture.
Okay, the basics. So what do these tell us about MHI right now? Fiscal year 2024.
Very positive, actually. Total assets were around $6.7 trillion. That was up, mainly because of cash they got from advance payments on projects.
Okay.
Importantly, their interest-bearing debt actually went down, and their equity ratio is about 35%, which is generally seen as pretty healthy, stable.
So a solid balance sheet. How about profits?
That's where things look really good. Record high revenue, roughly $5 trillion.
Wow.
And record high operating profit, about $383 billion. That's up over 35% from the year before. Huge jump.
35%, okay.
Yeah, and cash flow looks great too. Operating cash flow, free cash flow, both record highs as well. Around $530 billion and or $340 billion, respectively. Really strong operational performance, generating a lot of cash.
Those are impressive numbers, definitely. But,
yeah,
with any huge global company, there are always risks lurking.
Yeah.
What are the main ones MHI flags?
Well, they point to several things. Big picture external stuff, geopolitical risks, economic security becoming a bigger focus.
Right. the global landscape.
Exactly. Plus, rising power demand from AI and electrification, the push for decarbonized power, and labor shortages, particularly in developed countries. Interestingly, while they list these as risks, they also kind of frame many of them as opportunities, places where their tech can help with decarbonization or national security.
Okay, so turning challenges into opportunities. What else are they watching?
Currency swings, always a big one for a multinational like MHI.
Of course.
Their FY25 forecast assumes specific rates 145 per dollar, 155 per euro. So if the yen strengthens significantly,
It hits their bottom line when they convert earnings back.
exactly, it could negatively impact reported earnings. They're also keeping an eye on potential tariffs, especially U.S. tariffs, though that's not baked into their forecast. They expect to pass on cost increases mostly.
And supply chains. We've all heard nightmare stories recently. Is that a worry?
It seems they've learned from experience. They had a loss in their turbocharger business because a European supplier went bankrupt.
Ouch.
Yeah. So now for medium volume stuff, they say they're using alternative suppliers, have backup production plans. Also, they had some one-off expenses in energy in FY24, so they've put a all $20 billion buffer in the FY25 energy forecast, just in case.
Contingency planning.
Right. And finally, there's the risk that maybe the market for these new energy transition things, hydrogen, CCUS, maybe it develops slower than they hope, or customer needs change, market adoption risk.
Okay, so a mix of macro factors and specific operational points. Now let's connect those strong FY24 results back to their future plans. How do they plan to use this strong performance?
Yeah, those record FY24 numbers definitely give them a solid launchpad. Looking ahead to the FY24-26 plan, the big goal is, quote, both business growth and further strengthening of profitability.
Growth and profit.
Right. Through that portfolio management focus we talked about, they've set some pretty ambitious targets for FY26.
Such as?
Revenue of at least $5.7 trillion, operating profit over $450 billion, that's an 8% marginal better, and return on equity ROE of 12% plus.
Those are definitely stretching targets. So how do they get there? What's the plan for those growing businesses? GTCC, nuclear, defense.
For those established areas, it's about solid execution on projects, continued R&D to stay technologically sharp, and smart capital investment to grow capacity where needed.
Okay.
They see strong GTCCC demand coming from North America data centers, again, semiconductor plants replacing older power plants, also Asia and elsewhere.
Right.
And in defense, they're already prepping proposals for Japan's next big defense plan.
And then newer growth areas, hydrogen, CCUS, electrification. How do they push those forward?
There, it's about sustained, even accelerated R&D, really focusing on making these technologies economically viable, but also reliable from an energy security perspective.
Economics and security.
Exactly. And they plan to actively launch and scale up the business supplying equipment and solutions for data centers. So it's nurturing the core while aggressively chasing these new opportunities.
And this all feeds back into making the whole company more competitive overall.
Precisely. Adapting to change, finding new business models, using digital tech for better services, and this innovative total optimization idea they talk about.
Right. What's that exactly?
It seems to be about getting their different divisions to work together better, find synergies, make the whole greater than the sum of its parts for sustainable, significant growth.
It sounds like analysts, shareholders. They'll be watching a few key things closely.
For sure. Things like the order book for GTCC and defense, how profitability in the energy sector improved, if they keep generating strong cash flow, how well they manage the portfolio, any sales or acquisitions, and, shareholder returns.
Speaking of returns, what's their approach to dividends now?
They're actually making a pretty significant shift, moving away from basing dividends on a percentage of earnings, the payout ratio, to something called dividend on equity, or DOE.
DOE. Okay, what's the thinking there?
The idea is to create a more stable, predictable, and hopefully steadily increasing dividend over time, linking it directly to their equity base rather than fluctuating earnings.
Okay, and what's the target level?
They're aiming for a DOE of 4% or higher. They say that's over half their estimated cost of capital, around 8%.
So a meaningful return.
That's the goal. For FY24, the dividend is $0.23 per share. That's up 3, a record high. And they plan another increase to $0.24 for FY25.
Okay, and buybacks.
They've mentioned that's a possibility. If they have surplus cash after investing in growth, they might consider share buybacks too.
So the big picture seems to be use tech strengths to tackle climate change insecurity, make money, and return some to shareholders.
Yeah.
If we simplify the outlook, what are the key takeaways for their future direction?
Yeah, basically think clean energy transition leadership, developing hydrogen, ammonia power, CCUS, providing efficient energy for things like data centers. Their Takasago Hydrogen Park is key for R&D there.
Right, the test facility.
Exactly. They've already hit milestones like 30% hydrogen co-firing in turbines, testing new electrolysis tech, SOEC.
Okay.
Then security and infrastructure, advancing defense tech, safe nuclear operations, efficient logistics, transport systems. They got that new standoff missile contract, patrol vessels for Indonesia.
Right, tangible examples.
Yeah. Ultimately, grow sales, grow profits, reward shareholders. They're financially stable, investing actively, trying to adapt.
It's just striking how many different high-tech areas they're in. You mentioned the lead and gas turbines. Any other standout achievements pointing to their future?
Oh, yeah. Beyond GTCC, Nuclear's SRZ-1200 reactor design is mostly done. Testing's underway with power companies. They're also exploring SMRs, high-temp gas reactors, fast breeders, covering their bases.
Diversifying within nuclear.
Seems like it. In hydrogen, getting basic approval for a large ammonia carrier design is big. Plus, developing ammonia co-firing for coal plants that could be huge for decarbonizing existing assets.
Right, retrofitting.
Exactly. And the H-3 rocket program, despite early hiccups, seems to be finding its feet. Successful launches, contracts with Eutelsat, UAE Space Agency.
So gaining traction in space.
Definitely. And it's not just rockets. They were involved in the Slim Moon lander, the HTVX cargo ship for the ISS, even the Lunar Gateway project.
Wow.
And then there's the whole industrial machinery side, Primetals for steelmaking, automated warehouses, airport baggage systems, even Beaver air conditioners. Focus there is automation, DX.
It really sounds like a lot is going right. But as we said, there are always caveats. If you had to list the main good points and maybe things to note or be cautious about?
Okay, good points. Definitely the strong FY24 results, record highs across the board. The positive outlook for FY25, expecting more growth. Their leadership in energy transition and defense aerospace is clearly driving things. And the market seems to agree. Lots of buy ratings. They look like they're hitting the megatrends.
Okay, and the things to note.
Well, valuation is one. Some investors see the stock as potentially expensive based on metrics like PER and PBR compared to peers.
And the dividend yield is lower than it has been historically. While analysts are mostly positive, the range and target prices suggest maybe high expectations are already baked in. So risk of a correction if they miss targets.
Right. Performance needs to match the hype.
Pretty much.
And the order forecast. You mentioned a dip expected in FY25.
Yeah, the forecast is lower than the huge intake they had in FY24.
Right.
That was driven by some really big energy and defense orders. So the lower forecast doesn't necessarily mean things are weakening, but it's something people will watch.
Okay.
Plus, all those general business risks we mentioned, geopolitics, economy, exchange rates, materials costs, supply chains, labor, regulations.
The usual suspects for a global player.
Right. And risks specific to executing these huge, complex projects in new tech areas, hydrogen, next-gen nuclear, large CCUS. Remembering things like the MRJ jet or early H3 issues is, a reminder that big projects carry risk.
And there's still some ethical questions or criticisms around the defense business. That's correct. Certain groups continue to raise concerns about MHI's role in defense, its alignment with government policy, political donations. Some are calling for them to pull out of specific missile programs or the next-gen fighter.
Right.
It's a potential factor for their reputation, ESG ratings. Important to note, these are external criticisms, not MHI's stated position, but they exist.
Okay, so pulling all that together, the strategy, the financials, the risks, the criticisms, what's your overall take on their prospects based on this midterm plan?
Well, mission net zero by 2040, driving the energy transition, building smart infrastructure, managing the portfolio, those are clearly the pillars. They're putting serious money behind it, $650 billion, into growth areas like energy and aerospace defense over 3 years.
Significant investment.
It is. It's a balancing act. Invest in the future tech, but also strengthen the core profitable businesses. That innovative total optimization concept is meant to tie it all together, find those synergies.
So simplified future vision.
Lead in clean energy, CCUS, hydrogen, ammonia, advanced nuclear. Bolster national security, pioneer in space with H3. Make factories and logistics smarter with automation and AI. They're definitely responding to massive global changes, seeing them as opportunities. Their success in actually developing and scaling these new technologies. That's the key to their future growth, and honestly, it impacts society's path too.
Right.
Energy transition takes time, there are technical hurdles, market uncertainties. But the challenge is huge, and MHI wants to be a major player in solving it.
This has been a really fascinating deep dive. MHI is clearly at a crucial juncture, navigating some absolutely massive global trends. So to wrap it up, what are the final key takeaways for our listeners?
I'd say MHI is operating from a position of strength right now, driven by energy transition and security trends. Financials look good, key sectors are growing, there are leaders in decarbonization and defense, and the market generally sees that positively. But we have to keep the challenges in mind. Valuation concerns, potential dips in orders after a record year, all those external uncertainties, economic, geopolitical, plus the real technological and market hurdles for the new ventures, and the ongoing criticism around defense.
So the overall story is one of ambition and complexity.
I think that sums it up well. MHI's transformation is ambitious, tackling huge global issues. That brings massive opportunities, but also significant complexities and risks. Their success won't just shape MHI, it'll play a real role in how our global energy and security landscapes evolve. Definitely a company to keep a close eye on as they navigate these really dynamic times.